They say 90% of traders lose 90% of their money in the first 90 days. If you're looking at the chart right now and it's looking like a digital bowl of spaghetti, then you need to stop. I'm going to be showing you a condensed system of how I went from knowing absolutely nothing to becoming a profitable trader and building a rule-based system in exactly 30 days. On day one, I made a rule: no indicators allowed, no RSI, no moving average, no MACD. I spent the entire day studying raw price action, specifically the anatomy of a candlestick. A candlestick is not just about color, it is a physical battleground between the buyers and the sellers. From day 2 to 5, I stopped looking for where price will possibly turn from. Then I started focusing on basic support and resistance. See support as the floor pushing price up, and see resistance as a ceiling trying to push price down. By day 6, I wanted to open a real account and start making millions. That's funny, right? Thankfully, a mentor stopped me. I opened a demo account with a fake money, but I treated it like my life savings. For the next 10 days, I focused on a concept called the risk to reward ratio. I strictly committed myself to a rule that once a trade is not up to at least twice of what I'm risking, I'm not going to get involved in such a trade. So this means that even if I'm right 40% of the time, I can still end up being profitable. I logged every single win and loss in my trading journal. If a trade didn't happen at my zone of support or zone of resistance, I'm forced to sit on my hands. At this point, I'm training my discipline muscle and not my trading muscle. Then on day 16, reality sets in. Demo trading is easy because it doesn't hurt you when you lose money. To learn, you need to put skin into the game. This led me to make a deposit of just $200 into my live account. And my rule was simple: take a maximum risk of 1% per trade, which means if I end up losing a trade, I'll be losing just $2. Even with $2 on the line, my heart was always racing when I'm at a loss. If my trade is running at a loss, I want to close out of fear. And if it is running at a profit, I will also want to close out of greed. Then between that day 16 to day 25, I discovered that trading is actually not a math problem. It is a psychology problem. The problem, or the biggest enemy you have, is actually not the market makers. It is the person that is staring right at you when you look at the mirror, which is you. The final 5 days were about pure optimization. I took out my trading journal and I looked at things that were working and things that were not working. And I discovered that 65% of the trades that I take in the money do end up well. Whereas trades I take during the closing hour of the stock market ends up going towards a loss. So I doubled down on what was winning, and I was able to build a strict trading plan out of that. If a setup doesn't clear every single box on my checklist, then I don't touch it. By day 30, I realized that profitable trading isn't a thrilling gamble. It is actually a boring, repetitive process of executing the exact same edge over and over again. And that's it. You don't need a million indicators or a paid group chat. All you need is a clean chart, a well-defined risk management rule, and discipline to ensure that you stick to your plan with your demo account or your small live account. If you want to see more videos like this, make sure you like, you subscribe, and you share this video so that others can learn as well. See you in my next video. Bye for now.